The
My name is Dora Lee. This is a presentation for the course Finance for Business. I'm doing the part 1, which including 1.1, section 1.1 and 1.2. So this is my PowerPoint. The first section, 1.1, comparison of 4 instructions. These are the 4 groups that I choose. The first one is Australia and New Zealand Banking Group. The next one is Medibank Private Limited. The third one is Australian Ethical Investment Limited. And the fourth one is Bill Financial Group. So I just listed some key points of the organizations, and more details will be shown in the essay. For ANZ, the key activities including taking deposit and lending to customers. It was listed in Australia Stock Exchange on 30th September 1969, and its code of stock is ANZ. The company has a market capitalization of 51.11 billion. And next one, Medibank. Its key activities include providing private health insurance and motor vehicle insurance, life insurance, and pet insurance. The company was listed on 25th September 2014, and its code of stock is MPL. The third one, Australia Ethical Investment Limited. It's an investment fund. It obtains the revenues by investing in companies that are involved in ethical practice. It was listed on 16th December 2020, pretty young, and its code of stock is AEI. Its most recent dividend was 2.5 cents per share and will pay its next dividends in March 2021. The fourth one, Bill Financial Group. Its key activities include stockbroking, investment, and providing financial advisory services. The company was listed on 12th December 2007, and its code of stock is BFG. Its most recent dividend was 4.5 cents per share and will pay the next dividends in March 2020. And this is the second part of the essay. 1.2, analysis of financial management. So there are 3 main questions are listed in the guideline. The first one is capital budgeting, the next one is capital structure, and the third one is working capital management. So here in the PowerPoint, I just explain the definition of those 3 words. And I use ANZ, for example, to explain how it works. So as the time is limited, so I'll just give a brief introduction of the 3 words. The first one, capital budgeting. Capital budgeting relates to the appraisal of different investment options to determine the long-term assets that a company should purchase. It is done when a firm wants to commit a large amount of funds in purchasing assets, such as new machinery, plants, or land. Next one, capital structure. Capital structure explains how investments in a company are financed, such as by debt, equity, or a combination of debt and equity. It also explains the level of proportion between debt and equity. The third one, working capital. Working capital is the difference. It's the differences between the current assets and the current liabilities that explains the liquidity of a firm. A company needs to have adequate liquidity so that it can meet its short-term obligations. So basically, that's all of my presentation. All right, cool.
My name is Lalit Kishore. Today I'm going to give my presentation on my part from the subject finance for business. My part majorly consists with two major components. The first component is, as we see in this, fact finding of Australian financial market regulations. In this, my part will be again divided into 2 major sections. The one section is facts of listing in AXN, and second one is fact finding of requirements of financial advisory services registration in ASX. So we will be discussing first part. The first part is how we will list in this ASX. So what is the benefit and what is the requirement and what is the problems while you are listing in this. We are not having so much time, so I will be just briefly discuss my main part. After that, the next part will be how you will be listing in ASX. These are the few steps to follow to list in the ASX. The next step will be what is the fee structure of this while you are listing in ASX. So this is the major part as you see in my presentation. After this, the last part of my presentation is fact finding of requirement of financial advisory services. So it again consists five major parts as you see in my presentation about financial advisory registers, stakeholders of the registers, and information of the registers, relevant financial products and financial advisors, and last not but the least, professional standards of financial advisory. So these are the major components of my the perfect requirements of the registration in Australian share market. So concludes my part. Thanks so much. Bye.
My name is Shabir and my student ID is BSS3904 and the group number is 70. I was responsible for completing the introduction and half of part 3 of the project related to the risk analysis and the evolution of the project. The risk analysis and evolution was done by using the net present value and NPV sensitivity analysis to check the facts of changes in different value drivers of the NPV of the project. As the data in the slides depicts, the project involves in the initial investment of $2 million with the life of 4 years. The residential value of equipment was $200,000 while the working capital requirement was $600,000. Both the residential value and the working capital will be recovered in the 4th year of the project. The depreciation expense was $450,000 per year, and while the expected annual sales were $350,000 at the price of 22 units per unit, $22 per unit, and the variable cost of $11 per unit, as the project also involved cash fixed expenses of $350,000, while the discount rate and the tax rate of project were 10% and 30% respectively. The first step of sensitivity analysis was to calculate the NPV of the base case without any changes in value drivers. We calculated the operating profit by detecting the variable cost, depreciation expense, and fixed expenses from the sales revenue. To find the operating profit, the tax was deducted from the operating profit to determine the operating profit after tax or NOPAT. The depreciation expense was added back to the NOPAT because it was non-cash expense. The capital expenditure of $2 million and working capital requirement was $600,000 were subtracted at the starting point of year 0, and $200,000 of residential value, $600,000 of working capital were added back in the 4th year. The calculations of steps allowed us to determine the cash flows. Were applying the discount rate, were provided present value of cash flows, the net present value of then calculated by using the formula of NPV in Microsoft Excel, which added all the present value from year 1 to year 4 and subtracted the initial investments. The NPV base case was $6.14 million. The second step was to recalculate the project NPV by changing each value drivers to different cases. The first case involved the unit sales decreased by 10% from 350 units to 315 units. All of the calculations were done by just like the base case with the changes sales revenue and variable cost that also changes the cash flows and present value of NPV in the case 1 of $5.28 million. The price per unit decreased in the second case by 10% from $22 per unit to $90.80 per unit. The calculations were still the same as the base case, but the total value of sales revenue changes, which resulted in the changes in the cash flows and present value. The NPV of case 2 was all about $4.43 million. Thank you. That's all.
Hello, my name is Navarat Reddy. My student ID STRC3085. I did half section of part 3 and conclusion for the assignment for group number 70. I completed case 3 and case 4 of NPV sensitive analysis and the analysis of affected of the changes in value drivers on the NPV project. I am explaining now case 3. The project was variable cost per unit increased 10% to level of $12.10 per unit because the previous variable cost was $11 per unit. The calculation indicated that NPV of case 3 was as 1, which was $5,286,234.20. Now I am explaining case 4. Case 4. The case 4 project NPV sensitive analysis was increase of cash fixed expenses by 10%. The cash fixed expenses in base case were $150,000 was increased to $385 due to 10% increases. All remaining calculations and were value same, but fixed cost was different. Now comparison of NPV to identify the most sensitive value drivers. The NPV sensitive analysis to compare the net present value when value drivers changed in each cases. The table is slide show percentage changes in present values. NPV decreased 13.9% when sales decreased by 10%. The 10% decline in per unit. The NPV decreased 27.8%. The 10% increase variable cost resulted 13.9% decrease in the NPV. And analysis. The result of NPV and sensitive analysis of the changes in value drivers indicated the NPV most valuable drivers the same effective on the NPV because 13.9 percentage in both cases. The fixed cost value drivers have low affected on the NPV case. 10% increase the fixed cost only caused 1.3 changes in NPV. Now conclusion. The outcome of group assignment was increased learning and development of acknowledgement but financial about institutions. The regulator environment of Australia used capital of budget to analyze projects. And part 1 included evaluation of financial institution from perspective of an investor and questions about financial management. Part 1.2 offered information how companies utilize various methods achieving their goals of capital budget, capital structure and working capital management. And part 2.1 reviewed the advantages of list of AAX, and part 2.2 highlighted how financial advisor services can get registered through the ASACS. Part 3 based on the evolution and procedural project by using capital budget technical called NPV, net present value. Thank you.